The employment report that came out about a week ago was completely misread. I mean, that was, gee, the stock market went up,
Right.
unemployment, job creation exceeded expectations, unemployment remained constant. That was consistent with the happy talk, with the Goldilocks narrative, soft landing narrative, etc. And so it kind of stocks rallied on that. But if you look behind the numbers, I mean, there are two surveys. One of them showed 200,000, about 220,000 jobs created. The other one showed 1.5 million full-time jobs lost. And then there were about 700,000, a little more, part-time jobs created. So if you net the two, you still lost 750,000 full-time jobs. And then, of course, part-time jobs aren't nearly as rewarding as full-time jobs. And then they'll show that, hourly wages went up. Okay, but there were fewer hours worked. That's how employers are managing the costs. Like, yeah, I'll pay you a little more, but you work 30 hours instead of 40, so you're making less money. So there was, and then they gave a downward revision to the prior months. And for 12 months in a row, 11 out of the 12 months, they have downwardly revised the prior month's number. So why should we have any confidence in the 220? Because that's probably going to get downwardly revised next month. And when you're like 11 out of 12 months, that's not random. Yeah, there's a certain amount of noise in the data. Everybody understands that. But that's something seriously flawed in the model. You don't get that. It's like, rolling the dice, getting a 6 11 times in a row. It doesn't happen, or it's extremely rare. So there's something wrong with the model. So there's a lot less there than meets the eye. Germany's in recession. They just are. That data is clear, and it's getting worse. Japan is kind of right on the edge, might be in recession. UK, same thing, right on the edge. The U.S. China, saying China's in recession is probably a stretch. But if in China, if the growth goes from 10% to 7% to 5% to 4%, which it has over the last 10 years, that lost output is equivalent to a recession. China's trying to prop up their economy, so their economy is doing very poorly. When I see things like world trade contracting, it's not with the trade figures. Everyone focuses on surplus or deficit. So you have a trade surplus, your GDP goes up. You have a trade deficit, your GDP goes down. Or did the deficit shrink? That makes GDP a little higher, et cetera. Forget about that. I mean, yeah, okay, it's important data, but if you look at the top line, the exports and the imports, they're both shrinking. So whether the deficit gets a little bigger or a little smaller is less compelling, less important than the fact that both numbers are going down. World trade is shrinking, and that almost never happens except in recessions or during the Great Depression. So my expectation is, the Fed for now is not going to cut interest rates. They're done raising. That's pretty clear. You'd have to have some kind of inflation shock before they raise rates. That is unlikely to happen. Prices are going down. Well, sorry, the rate of inflation is going down. Prices are still going up. That's a big point of confusion. So prices are going up, but the rate of increase has dropped from 9% to 3% in the past 16 months. So that's progress. 3% is still well above the Fed's target of 2%, but they think they're at what they call the terminal rate. The terminal rate is the rate where it's high enough to bring inflation down without having to raise rates more. In other words, it's high enough to act as a brake. Just give it time, and inflation will come down on its own without further rate hikes. The Fed believes they're in that position. They won't be raising rates. So the question is, when will they cut rates? The answer is when it's too late. Meaning, the Fed are usually the last to know. And the best example I can give you, Danielle, is they pay enormous attention to what we just talked about, the unemployment rate. 3.7%. That's one of the lowest unemployment rates since the 1960s. I mean, it is extremely low. But they believe in this Phillips curve, and the Phillips curve is an inverse relationship between inflation and unemployment. So the view is if unemployment is low, inflation is going to get a little higher. If unemployment goes up, inflation goes down. So they're saying unemployment extremely low and saying, well, that's a little bit of a danger in terms of inflation. So we can't cut rates. But in fact, there are a lot of problems with that. First of all, there's no evidence for the Phillips curve. I mean, I can give you, do a quad chart. I can show you high unemployment, high high inflation in the late 1970s. I can show you low unemployment, low inflation, in the mid 2010s, and so forth. So you can find every low unemployment and low inflation during the Great Depression. So there is no Phillips curve, or you construct it. The Phillips curve, last time I looked, was a flat line, not much of a curve. So first of all, the Phillips curve is garbage. Secondly, employment is a lagging indicator. I'm not saying it's an unimportant number, but employers do everything possible to avoid laying people off. When revenues are drying up and margins are going down and profits are going down, they'll turn out the lights. They'll renegotiate the lease. They'll cut the laundry bill. They'll bargain harder with suppliers. They'll do everything they can except fire people, because people are hard to hire. You get the talent, it's hard to find. You train it, the last thing you want to do is fire them. So they will fire them. Unemployment will go up when they get desperate enough. But by then, the recession has already started. In other words, it's a lagging indicator that tells you nothing. So my point being, Jay Powell is looking at lagging indicators. If unemployment starts to go up, which I expect it will, he will cut rates. But we will already be in the recession. So he'll have political insurance, because he'll say, well, yeah, we're cutting rates, but hey, we're in a recession, we have to. It'll help him avoid the charge that he's doing it to help Biden. I mean, it's the charge will be made anyway. They'll be in the political crossfire, but the economy will be so bad at that point, no one's going to blame Jay Powell.